Good evening. This is the Elliott Wave update for the NASDAQ 100 from Monday, November 15th, 2021. During the tail end of the Globex session this morning, just before our opening here, the NASDAQ did go up and it broke above 16,256, which basically was what I was looking for to give support to this point being the completion point for wave 4. And for this rally to continue as a minor fifth wave. But stranger things have happened. The NASDAQ did finally kick into gear to come off and on the downside, and then broke below, which I was labeling as minute wave 1 of minor 5. And it broke below that level at 16,108. Traveled all the way down to, I believe, yes, 16,082 before putting in another rally. This left this as a 3-wave advance versus the starting phase of a 5-wave. So what I now believe we're getting into here is this high at 16,448 remains wave 3, minor wave 3. This is wave A of minor wave 4. This is wave B of minor wave 4. This is what the market seems to be telling me now. Now, that can all change again. If the market tends to hold that low, go back up, go up above 16,276 and start breaking again towards that 16,448 area. Now, it's just presenting a very crazy, disjointed picture. So again, we need the market to get some confirmation as to what this overall little bit larger picture of the last couple of weeks is actually forming. Now, because what I would interpret from here is that now we're going to do a C wave down. That C wave down would be expected to break below 15,896. So if I'm going to count it, and we're counting a minute C wave, and so all the subdivisions are a sub-minute level, but this would be 1 of C, 2 of C if it's complete, and we'd be getting ready to drop in a 3 of C decline. So that would suggest that we start to pick up some acceleration to the downside, similar to what we saw here, but it would go further. So we would start to break below the 20, below the 50, below the 200, below 16,082, and continue to break lower. And we get a 3rd wave in, a 4th wave reprieve or a bounce, and then a 5th wave down. Ultimately, if wave C is going to be equal in length to wave A, we're looking at a drop to 15,724. Now, to complete the pattern, what will be required is a new low below 15,896. So if I got down to 887 or 842 or 820 or 15,800, and I can count 5 down, we're in the clear. I would say that that's now complete and be looking for a low to put in, label it with a C, put the 4 over here, and set the stage for a continuing rally higher. What continues to pull on the market, again, is the larger tech stocks. We had Amazon, which basically stayed up for the majority of today. Facebook rallied pretty strongly. Google rallied, then came down. PayPal strong during the day. Netflix lower, Nvidia lower, Tesla lower. Now Tesla dropped below 1,000 again today, got down to, I believe, 982. Let me just double check for you. Let's just take a quick peek as to what Tesla's low was. 978, so a little bit lower than that. And then rallied all the way back, got itself back above 1,000, and actually started to just come off a little bit after the close. We can see that it closed at 1,013, and that was a downtick. And now they're continuing to sell it as we progress after hours. So it's still a wild game. It's very tradable, and keeping an open mind and just being open for both the upside and the downside provided us with plenty of trading opportunities today. And it was a profitable day in both the NASDAQ and in the S&P. So the waves weren't always real clear, or the moves weren't always real clear, and they did jerk around several times during the day, but that was primarily due to stocks that were going in one direction versus stocks that were going in the other direction, and both having an unequal weighting. So the downside happened to have a larger weighting than the upside, so it pulled the market lower, and then vice versa when things would switch around. What can we expect for tomorrow? I believe that what we should expect for tomorrow is a continuation of the formation of the C wave down to complete this minor wave 4. What's going to stop that? Well, a break back above 16,276 for starters. That would negate the pattern and suggest that this actually was the low for wave 4. And what really is going on is that the market may have exceeded that level, but possibly is just doing a whole series of three-wave moves. Now, yes, I can count this as 1, I can count that as 2, and then 1, 2, 3, 4, 5, in which case I'd have a third wave here, but the fourth wave should still not have broken that. So whether we're going to have to allow it or not, that depends on what the market tells us tomorrow. So right now, if the market were to go up and break above that and just continue going, then I'm going to have to take it as a continuation of this a minor fifth wave up. Now that minor fifth wave up is getting very disjointed, but again, because of where I believe it's headed and the top that it's putting in, we may have to allow for overlap. We may have to allow for a lot of craziness in the market as it gets itself to these levels, as the battle between the bulls and the bears continues. We do have a lot of the retail earnings coming in this week. And on the big side, we have Home Depot, which I believe already reported today, Lowe's, Macy's, Ross Stores, all of the larger retail stores and companies are going to be reporting their earnings this week. And that may provide a little oomph for the market to move up and finish this minor wave. Again, I'll switch the labeling back. I'm just putting it here because that's what it feels like the market is telling me. And that's why I'm including this. If I take this out and leave it as a 4, then we're back to the other. And I'll put that back on so that you can again see what this will look like. And it's going to be from, I think I can get this done on the 4 hour. So let me go back over here. Yeah, I can. Let me open that. So I want to go from the bottom of wave 2, which is going to be right there. And we're going to go up to the top of wave 3. And we're going to go to the bottom of what could be wave 4. So back to the hourly chart, we'll take a look at the upside. So again, resistance, 16,348, 349, which I believe we had. Then we start to break to new highs. So we have, again, we could throw in additional, if this is 3 and this is 4, then I can put in another from here to here, and that's going to fill in these blanks in between. But let's just consider that we have 16,350-ish to 400, a break above 400. We've got resistance at, what's this one? They're all kind of coming in lower. But we then wouldn't have resistance above 16,400. We're going to have it at 448. And then we have it back up, I believe at 16,475, 479, somewhere in there. And then it just starts to click 16,500, 550. But the upside does tell us that it should minimally, if it is going to be a fifth wave up, and it's going to complete that larger intermediate 5, primary 5, then I think we stand a chance. Again, here's our other upside, that a fifth wave, again, I've changed the labeling. So let's just picture if the market's going to go up and again break above that 16,276 number, then this reverts back to a 4, and we're counting back again in a 5-wave structure, the third wave likely being complete. This is the fourth, and now we're heading higher in a fifth, or 1, 2, this being only an internal 3, we got an internal 4, but it's see, the problem with any of that is that the market has just overdone the drop. So it kind of just really screws up this whole pattern in terms of what it could be. If I have to back it out and then what it's completing is that 3, it's already dropped below the 4. So if even if I'm saying 1, 2, 3, 4, 5, 3, and this is going to be a 4, it shouldn't overlap that, but it is. So it presents us with a challenge. If the market does go up and starts breaking 276, if the market holds here, I would expect that it's going to turn and we'll start to see it drop precipitously as the C wave develops and we drop in that wave 3 of C. Then I am looking for it to break these support levels and eventually break back below 15,896, head down to the stronger support to complete the move at 15,842 down to 15,724. So we got a bigger zone down here at the bottom. But I would expect that that's going to hold if indeed it's just going to be a wave 4 and we still have that minor fifth wave rally to do. So here's our choices. And I have to allow the market to tell me. I cannot say, oh yeah, it's definitely going to go here or it's definitely going to go here. Because we can see that it'll do whatever it wants according to how the orders are coming in, where the orders are going, et cetera, et cetera. So if the selling in Tesla is done and they're going to step back in and they're going to start to buy it up again, I believe the market will move, and the market will move with Tesla. Tesla does have a pretty strong grip on the NASDAQ, because along with that, I would think that Amazon continues to go up. Google will turn to go up. Facebook, they're loving it, and they loved it up to 350 today, and now they're hovering around just below that level. So if they're going to continue to buy Facebook, if this continues, today Microsoft was up and then down, and now if they can come back in and they move back into Microsoft, these will support this rally. Then we're likely going to get above 276 and we'll start to break out to the upside, eventually creating new highs above 16,448. That was my expectation coming in today, that we would build on this, that our pullbacks would be shallow and be held by moving averages. So in other words, the one that I was expecting after it got up to this resistance level was maybe a drop back to the 20 at the time, which would have been here again, like 232. Decent pullback, 40-point pullback, but it did not. It kept on going. And that just brought stronger selling, to be honest with you, because buyers had to go get out. They had to, surrender and change their mind. So tomorrow, here's what the potential is. And actually, in all honesty, folks, it has a 50-50 probability. A 50-50 probability that we're going to start heading lower, break below today's lows, on down through these support levels, on down through 16,000, back down below 15,896, and down to our support to complete the down move, if that's what it's doing. We're just looking for it to move lower, complete a C wave, a minute C wave. Those are the levels here and here, or anywhere in between. So the zone is approximately $70. So we're going to have to wait, and we will see tomorrow on that. Now, if it doesn't, and we come in tomorrow and it's actually up above 16,027 or 276, then I will change this back to a 4, and I will label this again 1, 2, 3. Put a 4 there and start looking for this fifth wave to get us up to new highs. And again, I likely would label this 1, 2, 1, 2, 3, 4. Another upswing for the fifth, a downswing, and then the final. So I still think we have a series on the upside. I still think we would have a series of 4s and 5s to do to complete all the 3s, and then the larger 4 and the larger 5 to finish the move. That should get us above 16,448. We seem to be well on the way today. Stopped on the dime, turned, went lower. So that's our scenario. We definitely need to focus and trade on what's trading in front of us, because we're looking for the market to tell us. And as we saw today, those turns can happen quickly. Those turns can happen and just really kick into gear very quickly. So A, we cannot be married to any position, long or short, because the market can turn very quickly and wipe out a P&L and wipe out an account before you've gotten a chance to blink and figure out what's going on. So we need to play the price action. We need to play against the moving averages. Again, when we bring these down, even on the 15-minute, it's not all that looking all that great in terms of the market is reversing. We have the 200 down here. Those were heading lower, but then you can see as the market began to buy itself back up into the close today, everything started and moved with it. The 20 turned higher, the 4 and the 8, of course, are expecting to turn higher, but the 8's getting ready to cross the 50, then the 200 crosses the 50, then we're all in alignment. And this is on a 15-minute. I'll go down to the 5-minute. We'll check and just see. This is what I do. This is how we make our determinations. Here again, the 5-minute, if the 2 or the 4 and the 8 turn and continue then back lower, it's going to revert things back down into a negative that the market should continue to drop. That would be the 8 dropping below the 50 and then below the 20, the 4 doing the same thing, the 20 turning lower, and all of them, not all, but up at the 200, the 4, the 8, and the 20 breaking back below the 50. As these things occur, I would suspect that it's going to accelerate any trading in that direction. So if the market's heading lower and these things start to break below these moving averages, I would suspect that we're going to get some acceleration to the downside. If they hold the decline and the market turns higher, then of course we're realizing that they were support and holding the 20 and turning higher. I would suspect that we're going to get a little bit of a stronger move back up. So that's what we're going to be weighing. That's what we're going to do as we're trading tomorrow. This is where I'm going to leave it. Trade smart. Trade using the moving averages. Trade using the LA, trade using the Fibonacci. Combined together, they give you great entry and exit levels, and they give you your break levels. So have a great trading day tomorrow. The next update will be Tuesday, the 16th.